Good afternoon, everyone. We're going to give all attendees a couple minutes here to join the presentation before we get started, so just hang tight and we'll start shortly. Good afternoon, everyone, and thank you for joining us as we present Genscape's 2015-2016 CAISO Winter Outlook. I'm Ross Fessenden, and I will be joined this afternoon by my colleague, Chris DaCosta. We're going to begin today by covering some demand factor data, specifically a review of fall 2015. We'll then move into winter temperature and precipitation forecast, as well as a brief look back at the winter in 2014-2015. We'll wrap up the demand section with an update on El Nino, its status, and expectations going forward. We'll then move into supply factors, which will include a water supply update, as well as look at generation. We'll then move into pricing and CAISO congestion, which will include a pricing outlook and some analysis of wintertime congestion. At the end, we'll have time for questions, and if you would help us in taking a brief survey, we'd be greatly appreciative. Into demand factors, we'll start with a look at September and October climatology from the most recent September and October of 2015. One thing you'll notice immediately are some deep red colors in the map to the left, reflecting temperature ranks in the 120-year climatology, 21-year climatology, sorry. Anything with a 121 reflects the warmest on record, so as you can see, much of the West experienced record to near record warmth. Specifically, October in California saw the warmest on record for both northern and southern climate regions of California, coming in 7 degrees warmer than average in Southern California and 6 degrees warmer in Northern California. Looking at the plot on the right, you'll see the same information portrayed except for precipitation, and the ranks there you'll see the Northwest as well as coastal sections in Northern California saw generally below average precipitation for this time of year, and the Southwest and interior southern sections of California experienced above normal precipitation. Taking a closer look at November specifically, you'll notice the plot on the left showing departure from normal temperature. And really the thing that jumps out here is a lot of cool colors reflecting below normal temperatures, pretty widespread through interior sections of WECC and stretching to most areas of California. The northern tier saw normal to slightly above, as well as eastern sections of WECC. From a precipitation standpoint, you'll notice the greens and yellows generally reflecting near normal precipitation. The anomalous areas, precipitation-wise, really occurred in the Cascades in Washington State, where we saw anomalously high precipitation, and Northern California experienced anomalously low precipitation for the month of November. Moving into demand for fall 2015, we did see a load peak September 10th, CAISO-wide, of 47.25 gigs. This was the strongest peak for fall in the last 6 years. Specifically, PG&E saw its strongest in this time period, the last 6 years, by about 430 megawatts, cracking the 20 gig mark for the first time in fall in the last 6 years. Another point of note is when looking at the time frame over which PG&E, SCE, and San Diego all saw their peak load, it fell across a 3-day span. This was the tightest concentration of load peaks regionally over the last 6 years. Now taking a look back at winter of 2014 and the weather recap for that time frame, we do see in the plot on the left temperatures anomalies for December, January, February of 2014 and 2015. And immediately you can see the separation of the continental U.S. east and west, with the east seeing below normal temperatures and the west seeing much above normal, with some areas in the west experiencing their warmest December to February timeframe on record. Precipitation-wise, as you can expect, accompanying the above normal temperatures, we did see below normal precipitation, especially in the areas that have been hit the hardest by drought in the last year, specifically California and coastal areas of the Pacific Northwest. Interior areas of the Pacific Northwest saw generally near normal precipitation. Now taking a look forward to Genscape's 2015 winter forecast for the months of December, January, and February. You'll notice at the aggregate level on the left for those 3 months, temperature and precipitation composite charts. And just quickly, some of the drivers here. We do see a persistence of the pattern, meaning that the West has been generally slow to shift away from the persistent warmth that we've been experiencing the better part of the last year. Also, the presence of a North Pacific warm blob generating anomalously warm sea surface temperatures in both the Gulf of Alaska and stretching down along the Pacific coast, which has resulted in warmer weather generally throughout the western U.S. Additionally, there's been PDO, the Pacific Decadal Oscillation, in a positive phase, which is going to act to amplify the last major driver that has really stolen most of the headlines, El Nino. Speaking of El Nino, a quick look at the ENSO status update for region 3.4. And you'll notice the plot on the right takes a look back to the start of November, showing the Nino 3.4 sea surface temperature anomalies. It gradually built through the summer and into the fall, with peak falling November 18th at a record-breaking 3.1 degrees Celsius anomaly. And you'll notice the 3.4 region highlighted in the plot in the bottom right section of the slide. Taking a look at the forecast expectations, we do see it weakening gradually through the spring. That said, we do expect El Nino state to be in place through the spring and into the start of summer in June. So what does El Nino mean for temperature and precipitation in the continental U.S.? The plot at left shows temperature correlations with positive sea surface temperature anomalies in Nino region 3.4. And what jumps out here are, again, the warm colors along the northern tier and into the Pacific Northwest. And those reflect positive correlations, meaning that positive departures from sea surface temperature reflect above normal temperatures throughout this region. And looking at the southern areas in the desert Southwest and stretching into the Gulf states and all the way to the Carolinas, you'll see negative correlations or inverse correlations reflecting those higher sea surface temperature anomalies indicating below normal temperatures for the coming months of December to February. From a precipitation standpoint, you'll again notice the warmer colors concentrated this time stretching from California all the way to the Carolinas once again into the mid-Atlantic. And these positive correlations now reflect more precipitation than normal associated with those positive sea surface temperature departures. And really the only inverse correlation that's discernible is into interior sections of the Pacific Northwest, which will have hydro implications, as we'll get into a bit later, but indicating that we can see below normal precipitation in association with these above normal sea surface temperatures. Taking a look specifically at Genscape's 2015 winter temperature forecast, you'll see that we are generally predicting above normal to much above normal temperatures throughout the northern tier, stretching from the Pacific Northwest into Montana and the Dakotas, with northeastern areas of Montana and the Dakotas standing the best chance at much above normal temperatures. Focusing specifically on California, you'll notice generally near normal conditions, with below normal conditions concentrated in the desert Southwest and Texas. There is a discernible risk, though, that these below normal temperatures concentrated in the desert Southwest could extend into Southern California. Taking a look at the monthly breakdown here of both temperature and precipitation, the real staying point is persistence of above normal temperatures and dry conditions throughout the Pacific Northwest. There is a brief respite from this in January, and again we see it returning in February stronger than any other month, with much above normal stretching along extreme northern sections of the continental U.S. Specific to California, we do see mostly normal temperatures across the season, with the greater chance of cool anomalies falling late in the season, with El Nino strength lingering. From a precipitation standpoint, we do see the persistence of above normal precipitation impacting California across all 3 months of the winter season, with the desert Southwest seeing a relief as we move through the season in this above normal precipitation. With that, I'd like to hand it off to my colleague Chris, who will cover supply section and some of the generation data for the upcoming winter.
Thank you, Ross. Now, taking a look at this map on the left, it shows the most recent forecast for the drought outlook from NOAA, and it is for the period that covers pretty much the entirety of our webinar. There are 2 key things to take away from this with regards to the West, which really is the only period of the country that's expected to stay in any sort of drought situation. As Ross was mentioning earlier, a typical El Nino pattern continues to show relatively dry weather in the Pacific Northwest, and this is verified by the strong persisting drought that you see in Oregon, Washington, and most of Idaho. Additionally, this year we expect that drought to expand to cover the states of Montana and the rest of Idaho. Now looking farther south into California, you do notice that it remains in a drought status, but that drought is actually improving over what we've been seeing in the last couple of years. And that is good news and tracks very well with both our expectations and what a typical El Nino sees. Now this has some pretty big implications for generation out west. You do see some increasing California generation. Now, looking at our expectations for the entire calendar year of 2016, at this chart here on the left, you see our forecast, which is the green solid line, banded by the light green the light green shades, and that indicates our risk to the stronger side and weaker side. Now, if you notice, that still is considerably lower than 2011 water year, which was one of the strongest on record. But conversely, it's a lot stronger than last year, which is that black solid line, which was considerably weaker. Some of the reasoning here is that we are coming out of 4 years of drought. So while El Nino should substantially increase the amount of water that falls in California, we're starting from a very low base. And that is indicated by the simple fact that looking at January and February, there's really not much of an increase relative to last year to start the year. We're only looking at an increase of about 200 to 300 megawatts over last year per day for those months. Now, the biggest differences do end up being seen during your more typical spring and summer runoff, where the increase over last year is about 2 gigs. So overall, the picture is expected to get a lot healthier year over year, but we're not going to see it quite in this time frame. Now, there are some risks to this forecast. In California, we could see much more above normal precip than what our base case is assuming. And the distribution of that would most likely be in terms of snow relative to rain, and that would push the average day in California during the months of June and July to about 3.5 gigs of output. And conversely, if we do see a weaker El Nino and less precip than what we're currently expecting, we would see a decrease in our current assumption a little bit more. We would only see about 2.5 to 2.7 gigs of generation across those days. So there's a pretty wide band, but right now it looks like we're a lot closer to the high side than we are to the downside. Now, moving north to BPA, very similar chart here with our assumption in the solid green and then the bands for the high case and low case. A couple of key differences relative to what we saw last year. One of the biggest glaring pieces is that July through March timeframe, that was actually the highest level of BPA generation of the year last year, which is in stark contrast to what a normal year looks like. There were 2 very good reasons for this. One, a lot of the precip that did fall last year was somewhat front-loaded into the season, and what did fall was in the form of rain more so than snow, because temperatures were a lot warmer to start last year. Additionally, anything that did fall in the form of snow early on very quickly melted because of the aforementioned warm temps. So this year, we do expect generation for the first 3 months of the year to be drastically lower than what we saw last year, and actually lower than what typically average for that time of year due to the El Nino situation that we're seeing. But we do end up getting to a much more robust runoff season in May through July. So when we get to that period, it'll be a much better situation heading into summer than what we saw last year. But for the early part of the winter, heading in really through March, we're actually going to see a deficit relative to what we saw last year. Now, looking at our winter expectations for load net renewables, you do see a very big dip, as I'm sure everyone's aware of, in the middle of the day because of the ongoing growth of solar. Now, some of the assumptions here to our expectations for what an average January day would look like in terms of load net renewables. We are expecting solar generation to be about 32.5% stronger than what we saw last year. And that is really entirely due to the solar growth, especially in capacity that we've seen through the calendar year this year. But we're not really expecting any additional projects to go online in this study period that ends in February. And looking at the hydro portion of this graph, we are looking at an average between January 15 and January 2012. And the reason for that is we are exiting a very strong drought. So as I mentioned before, it's not going to be really evident early next year that the situation is getting any better. So the hydro picture is still relatively flat. We do see some additional flexibility in terms of the morning ramp and evening ramp to help offset some of the growth in solar we've seen year over year. But that's not going to be enough to really push down any of the other parts of the day, particularly the off-peak period. And finally, wind is very flat in winter cases, and so we expect that to continue. That means that anything that we see change in terms of wind is typically going to affect only base generation. That would not be the case in other seasons where the shape is more of a diurnal pattern. But since there really isn't any consistent increase in wind, any changes that you see are just going to eat into your base load. So it's not going to change the shape significantly in this load net renewables case. Now, with the potential for a stronger El Nino than what we're currently assuming, there are some changes that would occur to this load net renewables curve. One of the biggest differences would be across the middle portion of the day. A stronger El Nino case would lead to expectations for solar generation to be about 10% lower than our base case. This would be due to widespread and consistent cloud cover that would naturally lower the potential for solar generation. But what this would also do is lead to about a 10% increase in wind generation due to more frequent storm tracks and changing weather patterns moving through the state. The big differences that you see with regards to the start and end of the day is just due to the loss of hydro that we would assume. It would be much closer to what we saw last year. And this would primarily affect any sort of dispatchable generation. So your peaks would be pretty much just a little lower due to, with the stronger El Nino, your hydro situation would be better, so you would be getting more generation pretty much throughout the entire day. And what that would do to your load net renewables curve is decrease both of your peaks and your off-peak period. And so you wouldn't have nearly as sharp of an evening ramp as what we're currently seeing and expecting. The flip side of that is if we do end up seeing a weaker El Nino situation, we would see a period that would actually look a lot closer to what we saw last year, with the exception of about 33% increase in solar due to the capacity build year on year. And that would also result in about 10% more solar generation than what our base case scenario uses as a result of fewer clouds across Southern California, leading to more consistent, strong solar generation and a bigger dip in your middle of the day, such that there would be some days where your hours ending 12 through 14 rival your hours ending 3 and 4 for lowest load net renewable hours of the day. But we would also see less hydro generation. So your peaks would be quite a bit stronger than what our current assumption is looking like. And additionally, wind would be about 10% lower than what we're modeling. And if you just look at last year's wind, it was by far the lowest of the previous 4 years in terms of generation overall. Now, looking at what this means for pricing impact, taking our base scenario for load net renewables from the first slide of the last section, we would end up seeing a heat rate for the on-peak average of about 11.9. and off-peak average of about 10.1 for SP for a normal January day. This is continuing to look like what we're seeing really right now in December, with a pretty distinct dual peak for your ramps. And that isn't expected to change anytime soon with the amount of solar generation that we have in the state. I will say that stronger El Nino case that we showed earlier would result in that curve flattening out a bit more as we get stronger hydro generation, which is dispatchable, and there would be weaker solar generation, which obviously isn't very dispatchable. And the added benefit would be there could be an additional an additional thermal component where units are no longer pushed out of the stack because of the very low prices in the middle of the day. Conversely, the weak El Nino case would flip that, and these peaks, particularly hours 7 and 8 and 17 through 20, would be quite a bit higher as you have a much stronger morning and evening ramp and less hydro generation to be able to ramp up to meet those. Just taking a quick look at last year's congestion overall and how it relates to the previous couple of winters. It was relatively in line as far as the absolute value of the shadow prices. The main differences were the level of congestion seen on Malin 500 and Knob because of the aforementioned anomalously strong BPA hydro generation. But also there was an added constraint on Miguel Mission, there's an added constraint due to rolling Miguel Mission outages that I'll go into on the next tab. Now breaking down last year's congestion in a little more detail, looking at that overall first constraint, which was quite a bit stronger than any other constraint seen last year. That is specifically due to those rolling Miguel Mission 230 kV outages in San Diego. Those lasted for pretty much the entirety of January and parts of December and February as well. And it was work done in San Diego that for some reason they didn't actually enter into the CRRs for those months. And so I think finally they ended up rolling that outage into the February CRR process, or maybe even it was March. But they were unknown until you reach the 7-day window for the short-term outages, and then finally, like clockwork, we would continue to see this congestion. The other constraint that really pops out here that isn't related to Northwest Hydro would be the Serrano transformer constraints. And there were actually two separate outages on some Serrano transformers that lasted most of January and parts of December as well. And these pretty much ended up these outages pretty much ended up overloading the additional parallel transformers that were available. And so again, like clockwork, every day we continue to see congestion in this area. Now, these were outages that were not known prior to the season, so they're not seasonal in nature, and therefore we don't expect them to occur again. Given that we don't expect hydro in the Pacific Northwest to be nearly as strong as what we saw last year, the Malin 500 and Knob constraints are also expected to be much weaker than last year. And so looking at the top 15 constraints from last year, only the Humboldt congestion is expected to really appear with any sort of regularity, and that is strictly due to the import constraint nature of that area and the seemingly endless outages occurring on the lines that lead into this particular area. finally, Nevada Energy ended up joining the CAISO EIM yesterday. Now this has some implications for CAISO overall, and really WECC in particular. It added about 1,600 megawatts of additional flexible import capability for the real-time market, with the majority of that occurring in Southern California at the El Dorado 230 system. But the Summit area, which is that northern Nevada transfer limit, that adds a little bit of flexibility for PG&E as well. Another added benefit is it allows power from Pacific Northeast to directly get scheduled into Southern California through Nevada on a real-time level, and vice versa. So it really does expand the footprint of for generation, both internal to California, but also anything that is in excess, say in Pacific Northeast, if there's some excess wind that's occurring. Before they only had about 200 megawatt transfer capability. Now they have about just under a gig. So a huge increase in flexibility in terms of WECC generation overall. Looking at the supply stack of the newly added region, there's about 6,200 megawatts of generation that was added, and 95% of that is gas-fired generation. So the big reason for, or one of the biggest reasons that people give for the expansion of the EIM is the ability to deal with inflexible generation in terms of additional solar and wind resources. It seems like Nevada is taking a different approach and has added their thermal fleet to be able to schedule into opposing markets at a 15 and 5-minute level, as opposed to California, who are mostly looking to send any additional wind and solar resources to surrounding areas to help offset or decrease the potential of any overgen situations that may occur. Thank you guys for participating in the CAISO 2015-16 Winter Outlook. If you guys have any questions, feel free to enter them into the box on the right side of your screen.
We did receive one question. It seems most forecasters have warmed their December to February expectations in the last couple of weeks, making your forecast look like a colder outlier. Have you seen any reason to revise warmer recently? If so, what was it? If not, why not? One of the things that near-term models have been latching onto with the increased and above expected strength of El Nino has been warmer near-term temperatures and stronger anomalies. We do believe this is more concentrated in the month of December, though, and we still don't anticipate strongly anomalous warm temperatures throughout the forecast period.
We have another question, this one regarding some passive teen congestion that we saw in Q2 last year. I think the big reason for that congestion was obviously the 3 gig D rate on passive teen for really, if my memory serves me correctly, the month of May through June, if not April through June. We don't expect that to occur again this year. Additionally, if there was that D rate, I think the congestion will be diminished somewhat, just due to the simple fact that packy flows will be a lot higher. Last year, if you remember what the BPA generation was at that time, relative to normal and relative to what our current expectations are, it was drastically lower than what we're seeing this year. So even if that D rate did occur, we would obviously see some congestion, but the congestion wouldn't be at near levels as we saw last year due to the added Northwest hydro situation.
Another El Nino related question. In Southern California, winter is projected to be wetter and temps slightly cooler with El Nino. Currently, temps do appear to be coming in cooler, but we aren't seeing the precip. When can we expect to see the precip changes in Southern California? So to answer this, one thing we've noticed is the jet stream that would funnel in some of this anomalously strong precipitation into California has yet to really take shape and take on the traditional El Nino pattern. Regarding timing of this, we don't see that shift really occurring until sometime after mid-month and even delaying until early next year. Thank you all for joining us on today's presentation. We hope it was informative. We will send along the slides and recording a little bit later on, and any questions that we were unable to get to, we'll be sure and follow up via email. Thanks for your time.